Hey guys, welcome back to another video by Fully Informed Trade, or Flash Trade for short. Knowledge for everyone. Right now I'm just hanging out outside. You're probably going to hear a little bit of background sound in the video. But I felt like recording outside because it's really nice out and not as loud as it is in Starbucks. But S&P 500 has been able to get a pretty decent rally out of this market. However, the disappointing fact is that this top right here wasn't able to penetrate above this top. So unless this trend line is broken above, chances are the markets will continue to pull back. And I've seen the dollar index been able to pull off somewhat of a recovery. So the stronger dollar is most likely going to dampen the strength of the stock market. And since the Federal Reserve hasn't really come out and done anything, they haven't really announced any news. They haven't really done anything different. All they have said is unemployment remains high at elevated levels, decent economic growth, but still slow and moderate. And what's the third thing? Inflation remains limited and non-existent almost. So it's pretty much the same story every economist has been saying about the economy. The only difference is that the Federal Reserve should be has the power to actually come up with another round of quantitative easing and another asset purchase program. The only problem is that there's very little political support right now for asset purchase programs. And the thing is that you probably have to see a country go bankrupt in the European economic zone. You probably have to see the stock market crash by maybe 500 points, and then Ben Bernanke will probably come around and pull the trigger when there is an absolute need for it and political support for it. But more importantly, even if Ben Bernanke were to come out and try to do an asset purchase program, it would probably be small. It wouldn't be enough. There wouldn't be enough money to make much of an impact. I'd probably think maybe around the $400–500 million range is what the Federal Reserve could realistically do right now. But if we waited, if Ben Bernanke were to wait and play his cards right, chances are he's going to wait for maybe a European economy like maybe Greece or Ireland to go bankrupt. Then once those countries go bankrupt, then he'll probably come along and say, oh, maybe I'll do an asset purchase program for $2 trillion, maybe $3 trillion. But until we have a major economic issue come afloat, you're not going to see the Federal Reserve come to the rescue, at least not yet. And the asset purchase programs, they need to get substantially larger than what they are now to have any substantial impact on the economy. And what I mean is that even if they were to come out and do like a $400 billion asset purchase program, the only thing you would do is inflate the stock market and you would inflate the bond market. But what you wouldn't do is achieve the economic goal, which is to increase the base currency. Since $400 billion really isn't enough to improve the stock of broad money, it really wouldn't have much of an impact on GDP growth. So what they would have to do is probably pull out maybe a $2–3 trillion war chest of money just to get the economy inflated enough so that the stock of broad money would actually expand and so that people would actually spend more money. So since that isn't happening, since we don't have enough of a economic driver and enough of a crisis going on right now, the Federal Reserve will probably just sit on their hands until it is the most opportune time to go ahead and pull the trigger on a really huge bailout package for the economy. So until that happens, I think the S&P 500 will continue to decline. I think Spain will get bailed out this Saturday, I believe. I think it's tomorrow or Sunday where the Spanish government will get their first round of money from the ECB officially, rather than being able to borrow it from the bond market that they usually borrow from. So since that's not going to, since they're not able to borrow credit from typical bondholders, the fact that they have to buy it from the ECB or borrow money from the ECB just comes to show how weak things are in Europe. And because since it's that bad in Europe right now, it's a good idea to assume markets will continue to fall, and the economic issues, the scale of it has increased quite drastically from what we had to deal with previously with Greece and stuff like that. So anticipate a lot of inflation, anticipate the dollar to weaken, no, not weaken, but the euro to weaken, and anticipate the dollar to strengthen, and anticipate the stock market to fall. So take care, folks. You have a wonderful trading session, and I'll talk to you guys more on Monday. We'll talk about the developments that happened over the weekend and see if anything has really changed. It's getting a little windy right now, so you guys will probably hear a bit of a whirring sound. So I better go ahead and cut this video short. You guys have a wonderful trading session, wonderful weekend. Talk to you soon. See ya.